Hey guys, my name is Courtney Epps, and I'm going to share with you a couple of ways to reduce your taxes for businesses and individuals. So this seminar is going to show you how to increase your tax deductions and tax credits while reducing your tax liabilities. So it's very valuable to businesses and individuals alike. And honestly, will you enjoy keeping more of your money? Because this seminar is going to show you exactly how to do that. So let's get started. Just to give you a little background about me, my name is Courtney Epps. I reside in Greenville, South Carolina. I graduated from Coastal Carolina University in 2002, and I worked for a large regional CPA firm during and after college, and I decided to go out on my own after that. So I've specialized in corporate, business, and payroll taxes for the last 15 years of my life. And I've owned and operated an insurance agency and an accounting firm in Myrtle Beach, South Carolina, as well as Andrews, South Carolina, and Johnsonville, South Carolina, with about 3,500 clients. So I've dealt with every business under the sun. So we're going to get started. The agenda, we're going to go through a couple myths that you may or may think you know or don't know. Commonly overlooked tax deductions, lowering your taxes, advantages of a home-based business. If you don't have one, you definitely need one. You'll understand why in just a few minutes. But we're going to look at what is tax-deductible business expenses, additional reasons on starting a home-based business, and how to save money right now, and what to do if you get audited, as well as different entities that you need as a business. We'll explain that further. So here's the myths that impoverish our country. 4 things. I didn't make a lot of money this year, so I don't need to know about tax planning. Well, that is just so incorrect. The thing is that the majority of the money that you spend is actually to taxes. And you'll see in here that you spend almost 50% of every dollar that you make going to some sort of taxes. And I want to start off by first letting you know that I got a lot of the information that I'm going to share with you from a book called Lower Your Taxes Big Time. His name is Sandy Botkin, and I'll show you a picture of that book at the end. But definitely go out and get that book, and everything that I'm telling you in this is in there plus some. So my home-based business, small business, has to have a profit 3 out of 5 years. See, that's incorrect. What the IRS wants is for you to actually operate as if you have a business. You just can't be in a business just to have a tax deduction is what they're saying. But the 3 out of 5 year rule is incorrect. And if you think about it, Chrysler Corporation, GM Corporation, those companies have been years and years and years without making a profit. So they are legitimate businesses, just like having a home-based business or small business, as long as you're attempting to earn income. And we'll share that in just a second. So my accountant or my spouse or friend takes care of my taxes. If you are expecting your accountant or your spouse or your friend to take care of your taxes, you are definitely in the wrong place and expect to pay more taxes than anybody else. Because the thing is that you need to know the tax law, or you need to have someone who is really keeping you up to date on tax law in order to maximize the amount of money that you are getting back instead of having to pay in a whole bunch of money. And tax knowledge won't save me that much money anyway. Well, just like I said, about 50% of every dollar that you spend goes back to taxes. So that's just completely incorrect. And it's actually, in all actuality, it costs more for taxes. You pay more in taxes, most people do, than you do for housing and food combined in an entire year. So it's insane. So commonly overlooked tax deductions and credits. So state sales tax. A lot of people don't realize you can write that off on your Schedule A itemized deductions, as well as charitable contributions. You've got student loan interest paid by mom or dad. That can be written off. Child care credit and expenses. You can actually get up to $3,000 a year in child care credit, and you can get up to $5,600 a year in an earned income credit, as well as daycare expenses. They can be written off. Elder care, so if you have costs related to caring for a parent, you can write that off as well, and you can actually claim them on your taxes as a dependent. Medical expenses, you've got IRA contributions, contributing to health savings accounts, and then deductions for self-employed. And I'm going to spend more time on this because everything that I went through at the top, all but the last one, deductions for self-employed, can be written off on your Schedule A. A couple other things like the health savings account that can be written off somewhere else. But here's the thing, deductions for self-employed gives you the highest tax savings. And in Lower Your Taxes Big Time, the first chapter of that book actually says why you will be brain dead not to own a home-based business if you don't already have one. So, learn your taxes. If you're an employee, the taxes deducted from your paycheck are based on your payroll income. So if you have a loss from a business, it could actually lower your tax bracket, and it goes dollar for dollar against any of your income. So it could be interest income, it could be retirement income, W-2 income, 1099 income, so all of those things. So drastically lower your taxes by having a home-based business or being self-employed. And here's an example. See, the thing is, most people think that if they're running out of money and they need more, then they'll just go out and get a second income. Well, here's the thing. This is why having more, I'm going to show you an example, why having more than one job in a family doesn't necessarily create a significant difference in the household or in most people's bank accounts because of tax laws. And here's an example. Jane Doe's husband makes $40 grand a year. That's about $3,400 a month. And when Jane Doe wasn't working, they had more money than money. So Jane Doe decided to go out and get a job. She was making about $20,000 a year. She only brought home $1,025 after she deducted all of her work-related expenses. Yet she could have netted the entire 20 grand had she earned it in a home-based business. This is an increase of 18 times her take-home pay as an employee. And so I'm going to show you the results here in just a second. It's crazy. It's startling. So here's your example. The 20 grand less her state and federal taxes, Social Security taxes, car expenses, so we're just saying 57 cents a mile, 50 miles a week, 50 weeks per year. She got 2 weeks off. Child care, got an extra child care added into there. Lunches at the job, business clothes, dry cleaning, higher food expenses, and your net take-home pay is $1,025 a year. So you wonder why in the world you don't have any money, and that's the reason why. So if Jane Doe starts a home-based business, she would not be spending dramatically more money than she's currently spending. And the reason why is because she's at home. She would continue to eat out and go on trips, but she would still have the same car expenses for repairs, gas, insurance as she did before. If she has a home-based business, however, many of her expenses can become deductible. This concept is known as redirecting expenses. And this is just the smart way to do it. So with a home-based business, you can now deduct some of the expenses that she's already incurring on a daily basis and not necessarily add more expenses to that. So here's the advantages of having a home-based business. Honestly, you'll never get rich or even maximize your income potential until you learn to get your taxes down legally, okay, to the legal minimum. And there are 2 systems in this country, and you've already probably figured that out. There's ones for the salaried employees or W-2 employees, and there's one for home and small-based businesses. Now, a home-based business is going to provide a more strategically beneficial position than just having a second job. And traditional job security has declined over the years. We all know that, and will continue to do so, making home-based businesses more attractive. Now, it's very likely you can save $2,000 to $10,000 per year by starting your own part-time home-based business. Now, what's tax deductible as far as a business expense? Any expense, and now this is what the IRS says, this is tax code. Any expense incurred for the purpose of gaining or producing income, incurred with a reasonable expectation of resulting in future business, and is reasonable under the circumstances, is a tax-deductible business expense. And so what does that mean? If you attempt to earn an income in the present or in the future, it can be tax-deductible as long as it's reasonable. Now, what is reasonable? There are numerous research out there on what is reasonable. But if you are attempting to earn an income and you are trying to help, just say advertising. So I'm a member of the Commerce Club, and that is a tax deductible business expense for me because I'm attempting to earn an income. I'm attempting to see new clients by going to the Commerce Club. So that is tax deductible. Now, redirecting your expenses allows you to take deductions for expenses that you're already incurring anyway. So things like home-based business use of your home. You've got cell phones. You can write off a percentage of that, and we'll get into detail on what things you can actually deduct right now. So a home office, to qualify as a home office, it has to be an area that is used exclusively for business activities. If your kitchen table doubles as your work desk, you can't deduct it. Now, however, if you have a dedicated room for an office, as I do in my house, or even a portion of a room, you can deduct some of your housing costs. You may have heard that home office deductions can issue a big red flag. Well, the IRS says this: if you don't have a business, you are 0.01% likely to be audited. If you have a home-based business, you are 0.03% likely to be audited. To me, the percentage change is worth the deductions because they are dramatic. Now, the IRS is more likely to audit the self-employed who take advantage of it. However, if you're legitimately entitled to the deduction, take it. It can be one of the most significant annual expenses that you have for a business. So here's some other things that you can deduct. Supplies, such as paper, printers, tablets, desk or office furniture, projectors, projection screens, computers, anything that you need to run your business. Now, advertising, such as business cards, print ads, magazines, yellow pages, advertising in general is tax deductible. Now, on the home office deduction, you got utilities, you got internet and telephone. You can write a percentage based on your home office. You've also got, on a home office deduction, you've got taxes, insurance. You also have repairs and maintenance. So a percentage of all that stuff can be deductible. Your cell phone, based on the business use, you can write off a percentage. You got your travel based on having a home-based business or a business, and conferences. These we call continuing education. So did you travel to meet a client? If so, you can deduct these expenses. Lodging, tips, meals up to 50%, transportation, and you've also got auto and commuting. And so in 2015, it was 57 cents a mile that you could write off for a standard mileage deduction, or you can actually write off you could depreciate your vehicle, and you could write off the maintenance and wear and tear on your vehicle as well. So you've got the option of one or the other. Depending on how many miles you put on your car, it may be more beneficial to do the standard mileage as opposed to the maintenance and depreciation of your vehicles. You also have parking and tolls that can be written off as well. Now, additional deductions, software, subscriptions, monthly fees, insurance premiums, retirement contributions, child labor. This is huge. If you have a child that can work in your business, you can actually give them up to $6,300 per year in a tax. You can write them a check for $6,300 per year to help you in your business, and they don't have to pay Social Security and Medicare taxes, and neither do you have to pay their portion of Social Security and Medicare taxes as long as they're under the age of 18. So there's some laws and rules that abide by that. You can give me a call or contact your accountant for that as well. Now, continuing education, training, seminars, all of those. Fringe benefits is huge if you have employees, including your spouse. So things like fringe benefits would be paying for medical bills. So that would be a really, really big deal. So we can talk more about that, but just fringe benefits in general is huge. Now, I want to share with you what it looks like as an employee and as a business owner. So we're going to say the same amount of income, $50,000 per year gross. You get, as an employee, you get a standard deduction, whether you're single or married. The personal exemption as well is what you get. So those come standard on a tax return. Now, here's the thing. You pay taxes on the adjusted gross. So we've got the $50,000 minus the $6,300 minus the $4,000 brings you as single to $39,700. Well, with federal, state, and FICA taxes, you are looking at 39.65% roughly of every dollar that you make going to pay taxes. That's about $15,741 in taxes, and your balance turns out to be about $34,000 left over for you to spend. Now, if you're married, you've got the $50,000 minus the $12,600 minus the $8,000, and if you have kids, you do get more personal exemptions. It's $4,000 per person, but you're ending up with about $29,400. And you're looking at about a 28.65% tax bracket. So you're paying about $8,400 in taxes, and your balance is about $41,000. Well, minus your living expenses. And we're just going to look at this and say, okay, we've got about $20,000 worth of living expenses that can actually be redirected to business expenses if you have a business. So here's the deal. You got your mileage, vehicle repairs, maintenance, cell phone, internet, meals, entertainment, childcare, vacations, travel, expenses, etc. Okay? If you deduct that $20,000, if you're an employee, you don't get any benefit as far as taxes go. So you're stuck, you pay the expenses out, and then you're stuck, you get left with the rest. So you can either put that money away or, I forgot, we got to pay groceries. You got to pay for all the other expenses in your life. So there's not a lot left. Most people who are employees end up with massive amounts of debt because they don't live their life based on how much money they get after taxes. They live their life based on how much money they get gross. And they don't understand why they don't have money at the end of the day. Now, a business owner, we're going to look at that one. It is completely different. We've got the $50,000 per year in gross income. Then we get to subtract business deductions. Those same deductions that were living expenses are now treated as business deductions if you have a home-based business. Well, then we get to subtract the standard deduction. Then the personal exemptions. You're left as a single person bringing home, or after your adjusted gross income is now $19,700. Notice you're in a lower tax bracket. You're paying less taxes. If you're married, you're even a lower tax bracket. And the difference is a startling 10 grand if you're single and about $6,500 if you're married. Well, here's the thing, guys. Employees earn income, and then they pay taxes, and then they purchase their necessities. Whereas business owners earn income, purchase their necessities, and then pay their taxes. That is huge. So you just understand as a business owner, you're so much better off. And the reason why is because the tax code was built for business people. Because we are there to create more jobs to hire more employees. So naturally, we're going to get much greater tax deductions. So, how to prepare for tax time. You're going to need bank statements, credit card statements, whatever you have that you have used for your business. Now, your tax software, it doesn't matter which one you use. Deductor's a good one. TaxBot is really good. That's actually by Sandy Botkin. QuickBooks, a lot of my clients use QuickBooks as well. But you're going to want to log your miles. Make sure you have that for audit time if you ever get audited. Cash receipts, you're going to need that, not necessarily to give to your accountant, but you're going to need that in the event that you ever get audited. And you're going to contact your local tax accountant for answers to your questions, or contact me. I'll be glad to be available. You can email or text me as well. I'll give you that information at the end of this seminar. Now, what if your CPA says you can't write these things off? And I've had that so many times. People have told me so many things about what their CPA or their tax accountant says that they cannot write off. Well, here's the thing. If your CPA tells you you can't write off the things that I've already given you the information on, you may want to find someone else to do your taxes. And the reason why, I've listed the IRS publications that it shows you the business expenses that you can write off. And you see, there would not be a Form 8829, which is business expenses for business use of your home, if the IRS wouldn't allow you to write those things off. So just remember that. Here's the publications. Check them out for yourself so that you can have your own research and understand why in the world a CPA will tell you that you can't write those things off. So what if you get audited? Here's the thing. The IRS wants to make sure you're attempting to earn a paycheck or earn an income from having a business, and that it's not a hobby. So you're going to want to do the daily or weekly business activities to ensure that you have a business plan, you conduct business in a business-like manner, you want to conduct activities like a similar profitable business, and you want to devote specific hours to your business. Follow the system that we give you. And so here's the thing. If you're attempting to earn income, you're going to have a calendar. And on that calendar, you're going to actually list what you've been doing. And so the more documentation that you have, the better off that you're going to be come audit time. I'm not saying you're ever going to get audited. And honestly, I have never been audited in the 15 years that I've owned my own businesses. And the reason why is because I have my information together. But even if I did get audited, I still have it ready and prepared for the auditor so that I don't have to worry about anything. So as long as you are doing a legitimate business, you're attempting to earn income, and you're doing either daily or weekly business activities, you don't have anything to worry about. How can I save money right now? See, I'd suggest you start a home-based business immediately. Really don't care what that home-based business is, but here's the thing. You are more than likely overpaying already on your taxes. That's why you're getting a tax deduction or a refund every single year. Well, instead of giving the IRS a tax-free loan, which is exactly what you're doing, you can actually do what's called a W-4, which is what you get from work if you're a W-2 employee, and you can change your exemptions. Go through it. Make sure you're having the amount deducted that you're supposed to. And the reason why is because the money that you're giving to the government all year long as a tax-free loan could be going to help pay off credit cards that you're paying high interest rates on. Or it could be going to help you start your own business, which could in turn make you more money and help you have more deductions on your taxes, in turn giving you more money back. So you can actually have federal taxes not taken out if you had a refund last year, but you need to make sure that you talk to an accountant before you do that. I'm not telling you to do that. You could get back an extra $100 a week. What could an extra $100 a week do for you, even if it was $50? So don't let the government keep your money while you're struggling. This money can help you start your own business, just like I just said. Now, here's the thing. These are what the experts are saying. This book is worth going out and getting and reading because I've only touched on the surface of the things that Sandy Botkin speaks about and teaches in this book. Sandy Botkin is a certified public accountant, chief executive officer, and principal lecturer of the Tax Reduction Institute. He was an IRS attorney. He spent 5 years as a legal specialist in the Office of Chief Counsel for the IRS, which is a really big deal. Written numerous articles, and has written this book called Lower Your Taxes Big Time. And it is the best compilation of how to lower your taxes than anything that I've seen. And it's very easy to understand. So you definitely want to go out and get this book after we get finished talking. And if you have any questions, I'll be glad to help you as well. This is a great book. So what do the experts say? What's Sandy Botkin saying in his book? See, here's the thing. You and I are taxed at every turn. Most of the taxes we pay are disguised as a fee. And see, here's what he says. Your auto license and registration, toll booths, hunting and fishing license, cosmetology insurance, cosmetology license, insurance, medical licenses, building permits, and the list goes on. And what about your recreational vehicles? Taxed when you buy them, you're taxed when you use them. It's not just federal tax, you also have states, county, city, tourism tax, personal tax, property tax. Are you feeling overtaxed yet? Believe me, I could go on and on for several more paragraphs just outlining all the ways we're taxed. And that is so true, guys. So just a couple more. What about your car? You pay tax on it when you bought it. Pay taxes when you sell it, license it. Next time you put gas in your car, look at the pump. You'll see a sticker explaining the breakdown of state and federal fuel tax you're paying. Are you tired of high gasoline taxes? 25% of what you're currently spending for fuel is taxed. Conservatively speaking, 50% of your gross income goes to some type of tax. This is why it's so important that you take every legal, honest, and ethical deduction that you have coming. So, a couple more what people are saying. The tax benefits of operating a home business, home office can be lucrative. That's from Forbes. If you use your car or truck to go from home to a business location, your mileage from home and back becomes a tax-deductible expense. That's from Huffington Post. Let me explain that. When you own a brick-and-mortar business away from your home, you do not get to deduct the mileage from your home to your business. And the reason why is because that's considered to be commuting miles. But if you have a business that is in your home, when you leave your home for a business to go do business, that is a tax-deductible expense. Now, you can deduct all your travel expenses. If your trip was entirely business-related, these expenses include the travel cost of getting to and from your business destination and any business-related expenses at your business destination. That's straight from the IRS. Now, different types of entities. This is the last thing I want to share with you. A sole proprietorship and partnerships. They offer the most liability. So if you were to get sued, they could take everything you own, and the least amount of tax benefits. So I would suggest either having an LLC or an S Corp. And here's why. An LLC offers massive liability protection if treated as a sole proprietorship or a partnership, it offers the least amount of tax benefits. So it's going to offer the same as a sole proprietorship or a partnership if you treat it as an LLC directly. If it's treated as an S Corp, and there's some forms that you have to fill out and send into the IRS, for tax purposes, it offers maximum tax benefits. And we can go into detail on that if you give me a call, or you can look that information up or ask your accountant for more information. Now, S corporations, they offer liability protection and maximum tax benefits. So I would suggest if you're earning a massive income, you definitely, an S Corp is the way to go, or either an LLC treated as an S Corp for tax purposes. And the reason why is because it allows you to bypass self-employment taxes. Now, there's some rules that apply to that. You have to earn an income. You have to create yourself a paycheck, and it has to be a reasonable paycheck. But all in all, you know, what we have found is there's massive tax savings in either having an LLC treated as an S Corp or having an S Corporation. So I am going to pull up my contact information so you guys can see it. And if you should have any questions or would like to contact me at all, my phone number is listed here, and as well as my email address. If you do not get a response from me immediately, please text me, as that is the best way to contact me, and I will call you back. Just let me know your name and what you're calling about, and I'll be glad to give you a call. So I appreciate you taking the time today to see this information and to understand this. And, you know, we want to help you guys reduce the taxes you pay legally, morally, and ethically. So, as that being said, have a great day.